In this video, we are going to explain exactly what national insurance is, why you pay it, what it funds and how it is calculated, all in one place. National insurance is a tax on your earnings that funds some of the UK's most important public services. It is completely separate from income tax and is deducted automatically from your pay every month alongside it. You will always see both listed separately on your payslip. Your national insurance contributions go towards several vital things. They fund the NHS, covering doctors, nurses, hospitals and treatments. They build up your entitlement to the state pension. They also contribute towards statutory sick pay if you are too ill to work, maternity and paternity pay when you have a child, and unemployment benefits if you lose your job. Every contribution you make builds your national insurance record, and that record directly affects what you can claim in the future. You pay national insurance if you're employed and earning above a certain threshold. In both the 2025 to 2026 and 2026 to 2027 tax years, you start paying once your earnings exceed £12,570 a year. Below this threshold you pay nothing at all. Above it your contributions are deducted automatically by your employer through PAYE, just like income tax. In the current and upcoming tax years, the rates for employees are 8% on earnings between £12,570 and £50,270, and 2% on earnings above £50,270. Your employer also pays national insurance on your behalf, currently at 13.8% on your earnings above £9,100. This employer contribution is completely separate from yours, and does not come out of your pay. National insurance is only calculated on the portion of your earnings above the threshold, not your whole salary. Here is how it works on a salary of £25,000 a year. The threshold is £12,570. National insurance is charged on the difference, £12,430. At 8%, that is £994.40 a year, or £82.87 a month deducted automatically from your pay. National insurance and income tax are often confused, but they are completely separate. Income tax goes to general government funding, covering schools, roads, defense and public services. National insurance goes specifically to your state pension and social security system. Both are deducted from your pay automatically every month, and both will always be listed separately on your payslip so you can see exactly what each deduction is. Every year you pay enough national insurance, you receive what is called a qualifying year on your record. You need 35 qualifying years to receive the full new state pension. You need at least 10 qualifying years to receive any state pension at all. You can check your national insurance record and your state pension forecast at gov.uk. If you have gaps in your record, it is sometimes possible to fill them voluntarily, which can significantly increase your income in retirement. Here is a complete example. Someone earning £25,000 a year pays income tax of £207.17 a month, and national insurance of £82.87 a month. Together that is £290 for every month in deductions, both calculated on the portion of earnings above £12,570, and both shown separately on their payslip. Understanding national insurance is useful in so many situations. When you are reading your payslip and want to know what each deduction is for. When you are planning for retirement and want to understand how your state pension is built up. When you have had gaps in employment and want to know the impact on your record. And when you are comparing job offers and want to understand the full picture of your deductions. The most common mistake people make is thinking national insurance and income tax are the same thing, or that one covers the other. They do not. You pay both separately, and they fund completely different things. National insurance is not optional, but every single contribution you make is building something genuinely valuable for your future, including your state pension. To recap, national insurance funds the NHS, your state pension and the social security system. You pay 8% on earnings between £12,570 and £50,270. It is completely separate from income tax, and both are deducted automatically from your pay every month. Thank you for watching. If this helped, please subscribe for more everyday money topics explained simply.